If you've been trading for some time, there is no doubt that you've used different indicators to help you make a final judgment on where you want to be positioned in the market. Whenever we hear about an individual purchasing at the bottom or selling at the peak of a cycle, we are often amazed by how they did so. Buying the bottom and selling the top remains the fantasy of every trader and investor. But what if I told you that there is an indicator that can yield you a better return and make you more money than exiting the market at its peak? In the last video, we covered Bitcoin hash ribbons. This indicator would have delivered fantastic profits, and we were delighted to see how accurate it is. However, that model was specifically designed for BTC, and so what if there was another model, easy to understand, free and simple to use, that could also make you money? In today's video, we'll review an indicator that many of you know, an indicator that some consider unhelpful, and I will demonstrate why not following its signals is a big mistake. The moving average convergence divergence model is a trend following momentum oscillator that displays the relationship between two exponential moving averages primarily used to trade on trends. It is composed of two lines. The blue line is the MACD line and the orange line is the signal 1. The strategy we will use is very simple. We will buy every time we get a bullish cross like this one, where both lines head towards the upside, and we will sell whenever we get a bearish cross. It is usually recommended to wait some time following a cross to confirm if that move is false or not. We do not intend to do that here. We will buy and sell regardless of the noise, and we want to see if a free indicator like this one could make us some decent gains. What I did is I created a few different dashboards for you to see if this indicator is worth using or not. The first dashboard displays Bitcoin's return weekly since 2017. So, to be more clear, we told the computer that we have $10,000 to start with on the 25th of September 2017, and we want to see how much cash we will end up with today. We won't DCA or increase our capital in the meantime. We will simply use the initial deposit and follow the bullish and bearish crosses. The profits we generate will be reinvested, of course, and the losses will be deducted. The dashboard displays many things. It has the bullish cross date as well as the sell date, which is when the bearish cross occurs. We also have the buy and sell prices, the P&L, the ROI, and how many coins we will have overall. We also want to know how many Bitcoin we end up with, because the goal is not only to make cash, but also to increase the BTC position. At the end of the day, that's what we all want. Shockingly, this dashboard reveals crazy returns. If you started with $10,000 at the end of 2017, you would have generated roughly $391,000 in profits in 5.5 years. That's a massive return. If you held, for instance, and you didn't trade, you have only $62,000 today. We notice a prominent difference between holding and trading the MACD on the weekly time frame. This is one of the main reasons why I dislike the holding mindset. You will expose yourself to bear markets and to brutal corrections that could be avoided. Of course, you can't avoid corrections every single time, and you definitely won't bypass the entire move down. However, even bypassing a portion of it is better than getting demolished. The difference between $400,000 in profits and $62,000 in 5.5 years is enough proof of that. Now, what if you saw the top? Imagine you saw the top, okay? Imagine you were that guy who formed the market top at $69,000 2 years ago. You would feel happy and everything, but even if you managed to do so, you wouldn't have outperformed the MACD in this time frame. It sounds weird and it might not make sense, but hear me out. By holding and selling the top, you don't increase your BTC holdings. Instead, you start with a sum and finish with the same. The coin's value is just appreciated. But if you trade with this indicator, most of the time you will rebuy at a lower price. For example, if we look deeper, in 2018, you sold for $11,765 a piece as the MACD flagged a sell signal. 8 months afterward, you will rebuy again much cheaper at $6,416. This is why I like this indicator. It's because it gives you a chance to re-enter the market at a much lower cost, allowing you to accumulate more sats. The profits you have made with this indicator are more than double what you would have made selling the top, which is crazy. Also, there are some times when the MACD is wrong. It has a 33% failure rate, and we can see 3 negative ROIs on this dashboard since 2017. But look, the losses are not that massive. 7 or 14% isn't that big in comparison to how much money you could be losing in a bear market. So, what we understood from this dashboard is that you're not guaranteed that your first signal is profitable. You might end up with a loss, but sticking with it over a long period of time has proven to be helpful. Now, I have decided to do the same exact thing, but in a different time frame and period. What if we started using the MACD in 2022, last year? Because last year was one of the most brutal years in crypto history. Numerous protocols, crypto projects, and hedge funds turned insolvent, pushing Bitcoin down 77%. And so the question that arises, can the MACD save us from such phases? Can it offer support to help us at least preserve the capital? Can it beat a bear market, in other words? The dashboard here is also similar to the first one. We have the purchase and sell dates, the buying price, as well as the number of coins and ROI. If you started with $10,000 last year on the 1st of January, you would have turned that into $20,000, as your profits would have been about $10,462. However, if you held till today without trading, starting on the 1st of January, you would have lost 40% of your money. Doubling your money in what supposedly is the most brutal bear market in the history of the crypto asset is shocking. There were also times when you would have lost money, but the negative returns were slim. As you can see, all of them ranged between minus 0.6 and minus 6.5%. This is proof that the MACD is indeed a good indicator regardless of the environment you are trading in. In 2022, not only would have you doubled your money, but you would have tripled your Bitcoin holdings. I don't think you can ask for more from a free indicator. Now, the data we discussed so far is only related to Bitcoin's price movement, but what if we use the same model with a different project? I am referring to altcoins here, such as Ethereum. Will the results be different? Ethereum is, of course, more volatile, and so we want to have a deeper insight into this indicator. The Ethereum dashboard that we are seeing right now is very similar to the first BTC table. It displays the 5-year ROI trading with the indicator on the weekly time frame. Okay, so we are using different time frames, as you can see, to prove to you that the MACD is good regardless of everything. The same strategy applies. When we get a bullish cross and both lines head towards the upside, you click on that cute green buy button and sell when you see the bearish cross and both lines head towards the downside. If all you did is follow the signals, you would have ended up with $277,000 today in profits. Whereas if you held, you would have only made $38K in profits. Imagine making 7 times more money than holding. All over the crypto industry, you see these individuals mentioning diamond hands and how you can't sell. Selling will supposedly get you wrecked, but we notice the opposite from these dashboards. Holders are the ones getting isolated from profits, while traders and people who press a button when they see a cross make way more money. There are a few drawbacks I want to discuss, by the way. For Ethereum, for example, there is a slight difference, which is the negative ROI. With Bitcoin, we've also had negative returns, but they weren't as brutal as the ones with ETH. The MACD would have lost you 36% of your money in 2018, as the buy price was much higher than the selling price, for instance. In the big picture, you don't notice that because profits make up for losses. But as I keep communicating, you're not guaranteed that your first, second, or even third MACD signal will be profitable if you start using it right now. And this is why I always suggest that you make your own conclusions. If you want to use this model, I think you should stick to it for quite some time. Math has spoken and data is showing us that the MACD is not only better than holding by miles, but it also outperforms selling at the top, as it gives investors opportunities to enter the market at better prices. There are certainly times when this indicator would have lost your money, as we said, but over time, all three dashboards with Bitcoin Twice and with ETH show a clear picture. Indicators like the MACD are indeed very helpful. So I hope this video was helpful. I'm not going to tell you whether to use this model or not. That is 100% up to you, but you can see where this is heading. That was about it, everyone, for today. Thanks for watching. Please like the video if you enjoyed it. Share it with your friend who might be looking for a decent indicator or who is stuck with trading. Leave a comment down below if you have any questions, and I'll see you on another video. Bye bye.